Well, good afternoon, everybody. My name is Lee Schwartz, and I'm the Director of Business Development for SVA Certified Public Accountants. I'd like to welcome you to the fourth and final webinar in our dental series. This one is titled, Get Ready for a Buy, Sell, or Ownership Transition Scenario. Now, before we get started, I just want to take a sec and say a few words about SVA and our history in the dental industry. Like many of you, we got to where we are by being independent, and our vision moving forward is to remain that way and continue serving the same clients we have since 1974. And a huge part of that client base over these last almost 50 years now has been dental practices. Our mindset is that when you're a practice owner or shareholder, you have to work with someone who's more than just an accountant or tax preparer. You need someone who's a true advisor working collaboratively with you throughout the process. This webinar and others like it are just one small way in which we do that. Now, we've got a lot of content to go over the next 30 minutes, but we are going to try to leave a couple minutes at the end for some Q&A. So please chat in questions as you have them, but we're going to try and save those till the end. So let me briefly introduce our speakers. If you've been to any of the first three webinars in our series, you know we have a very deep bench of dental experts. Unfortunately, our best experts were not available today. So instead, you'll have to settle for these guys. So we've got Andy Slinger, who's a CPA and principal in our Madison office, and James Emmerich, or JD, who's a CPA and senior manager in our Brookfield office. Obviously, I kid, but these guys really know their stuff, and they work with practice owners on efficiency, profitability, tax planning, and of course, buy-sell strategies. All right, I want to let these guys dive right in. So Andy, I'm going to let you take it from here.
Lee, thank you for that raving introduction. I really appreciate it. Want to welcome you all. As he mentioned, this is a large audience. Clearly, this is a hot topic right now for all of you. Looking back, it's the first time we've presented this topic to the dental community since 2019, or as what we will forever be known as pre-COVID times. So, as he mentioned, buy, sell, owner transition, so many options that we figured we'd start with a poll question just to kind of get an idea of who's attending our live session here. So very simply put, are you looking to sell either the entire practice or a portion in the next 3 years? Looking to sell, not sure when. Looking to buy a practice or into a practice in the next 3 years? Or are you looking to buy at some point, but you're not sure when? Drum roll. Okay, and that's what we're finding. You know, one of the things we're going to do here in our presentation is sprinkle in trends, because you all want to know what's going on in the marketplace, and you know that we talk to dentists every day and we know what's going on. We're involved in these transactions. So overwhelmingly what we're seeing is there's a lot of selling going on, and 89% of you attending live are looking to sell either in the next 3 years, or you're really not sure when. Could be sooner, could be later. And there's a shortage of buyers. That's the other trend, you know, especially on the private practice, private sales side. And that's why, of course, there's a lot of activity on the corporate and private equity side. So knowing that's our primary audience, let's dive in and really give you a high-level overview. This is exactly the topics that drew you here today. What's my practice worth, and what's that going to look like in the due diligence process? How do I determine timing? What's tax going to look like? Associate is a big part of this, okay, for various reasons, as you're going to see. What does it really cost? How do I do it? And how do I protect myself if that associate relationship doesn't work out? So as far as starting the process on the transition side of things, this is how we start every consultative meeting with someone looking to either buy or sell a practice. When? It's so important, you know. A lot of you, 67% of you, don't know when. Well, as you get closer, put that stake in the ground and pick a date. So important. You can always move it, but if you don't have that date, you have nothing to, you know, set yourself a goal towards. So make sure you put the stake in the ground. What are you buying or selling? Is it just the practice? Is it a portion of the practice? Is real estate involved? Who? This is a huge one, right? I just told you there are fewer buyers on the associate side. So is it a known associate in the practice, in a different practice? Would you like to sell to an associate, but you don't know who that is? Or realistically, are you looking at corporate, private equity, or really is it, hey, I'm going to consider all my options and, show me the money. Let's see where it shakes out. How much? We get this question every week. How much is my practice worth? Or this practice is listed for this price. Is it really worth that? Help me evaluate, help me go through that process. And the other thing, obviously we identify, depending on where you are in that process and what your timeline is what are your next steps and what should you be doing now? So what are you buying and selling? And very simply, you want it to be an asset transaction, okay? And an attorney would give you more specifics, but stock sale, the way to think about this, if you're buying assets, you're buying the assets, you're going to start your own entity, you're moving forward. What happened in the past in this practice doesn't matter. You buy the stock, you're buying any skeletons in the closet, any liabilities, anything that may have happened in the past kind of goes with you as the new owner. So 99% of what we see is an asset purchase. What are the assets that you're buying in that practice? You're buying the accounts receivable, you're buying a couple months of inventory supplies on hand, and you're buying the equipment. And the valuation on that is really going to be the fair market value of the equipment in that practice. More tangible assets, you're buying the leasehold improvements, sometimes whether or not you're also buying the real estate. You may or not be buying or selling the building. It depends how you're going to structure this sale. The one note here, there are individuals that will value your practice, including experts on our team, but typically the real estate side, that is going to be valued by a certified real estate appraiser, typically two separate valuations, something to keep in mind. Now, the building doesn't always go with the practice. If you're the seller, you may want to hang on to it for some cash flow in your next chapter, whatever you're doing next. You might want to spread out the tax consequence of this transaction. On the buyer side, it might be a little too much debt to take on. Let's start with a practice, let's rent for a while, and then let's have an option to buy the building at some point in the future. What are the intangible assets? A lot of names for this, okay? Goodwill, blue sky, the right to earn an income in the future, a book of business, a patient list. That's the big piece of the transaction. Sometimes attorneys will recommend that you allocate a price to the covenant not to compete. Sometimes you'll have to sell the name of your practice for a specific reason. And again, depending on the facts and circumstances, there may be other intangible assets that are assigned and allocated a value, but it depends. Okay, so in a sale or a purchase, the largest factor is goodwill. So if you're looking to maximize the value of goodwill, what matters? Location, location, location. Okay, this is the Walgreens example. Every Walgreens or CVS on a corner, it's right there. It hits you in the face when you need it. Same thing, where's your practice? Is it good signage? Is it easy to find? Is it well known in the community? Physical condition, curb appeal. I walk into the lobby. What does this place look like? Has it been spruced up? Is it a welcoming environment? Your expenses, let's look at your overhead. If I'm buying this, what's my profitability? Or why is this place so expensive to operate, and will I be able to operate it leaner? If I'm buying the practice, am I going to get a good lease if I'm not buying the building? If I'm buying a practice, I want a place to practice in the future, guaranteed. I don't want to have to worry that this place might be pulled out from underneath me at some point. Fee schedule. I know this is the Delta Dental effect. No matter what your fee schedule is, 80–90% of your revenues is set, but still a good idea. Due diligence, have a fair market value fee schedule that reflects the value you're providing and the services you're providing. And make sure that whatever you are doing now, or whatever you're going to buy, whatever the procedure mix is, are you going to be able to carry that on? Or is the buyer going to be able to carry that on? Payment terms. At closing, most transactions, the tangible assets, the accounts receivable, the equipment, the supplies, leasehold improvements, typically going to be cash, okay? The goodwill, a lot of factors here, okay? It's the terms. If you're letting an associate buy in, you probably have a deferred comp arrangement. Maybe that's structured over 5 years, 3 years, 7 years. If you're selling to corporate or private equity, maybe there's a portion of the valuation in the sale that you're going to defer as equity in this new corporation. Maybe part of the purchase price is in future incentives based on revenue or EBITDA. So again, typically there's a portion paid at close in cash, and there's a portion that's just deferred over time. That's really the point to get across here. Regardless of the valuation, what you get in cash, what's deferred, you also have to consider, well, what's the tax allocation? For today, the takeaway is, if you're a seller, you want more allocated to Goodwill, okay? Because that's long-term capital gain to you, more favorable tax treatment and rate. If you're a buyer, you want more allocated to the tangible assets, because I get to immediately write that off, time value of money. Goodwill to a buyer, I got to amortize that over 15 years. So it's going to take me a longer time to get a tax value on that. So that's the short on that. When each party files their tax return in the year of sale, there'll be a Form 8594 that you each file. It matches, you have to agree to it. It tells the IRS, this is what we did, this is how we allocated the purchase price. Okay, couple competing viewpoints. If you're the seller, okay, I always tell you, you want cash, okay? This is especially important if you are contemplating selling to a corporate private equity buyer, okay? A lot of these deals, they will set a value on your practice and it'll be rosy and they'll try to get you to drink the Kool-Aid and it'll be ripe with potential pitfalls. I always say, what is the cash you're getting or what is the guarantee, okay? A portion of that, as I mentioned, could be equity, could be, hey, in this new corporation that's being formed, you're an investor. Well, that could be worth zero someday. Or there's incentives based on future revenue or future EBITDA. Those can be manipulated on facts and circumstances. Those can be worth zero. I always say focus on the cash. The rest is potentially a wild card. If you are the buyer, okay, many times it's a younger dentist. As we're going to talk about, younger dentists, more inexperienced dentists come out of school with a lot of debt. From school, maybe they just bought a new home, depends on their life circumstance. In part, they're concerned with, how am I going to pay for this? What are the terms? I'm going to be in debt for the rest of my life. Banks are lined up, ready and willing to finance these transactions. Now, obviously, hot off the press, the last many months has been interest rates. They are having an effect on valuations. It's going to have an effect on deals. But the banks are still more than willing to borrow money to buyers of practices, even if you're highly leveraged and have a lot of debt. How much is my practice worth? Or how much is this practice that I want to buy worth? Okay. I highly recommend on either side, have a formal valuation done. You're only going to do this once, more than likely. Yes, you can do the back of the napkin calculation, but you want someone to consider your specific facts and circumstances, and it's worth the price that you're paying for the valuation relative to the investment you're making on the practice and maybe the real estate side. Rules of thumb, revenue is still king. When I look at a transaction, I look at revenue because that to me is the most certain thing. That's the least thing that can be manipulated. What are you bringing in? What's the trend, up or down? Typically look at a value of revenue. A lot of these corporate sales, private equity sales now are factoring in EBITDA. What's EBITDA? It stands for earnings before interest, taxes, depreciation, and amortization, okay? Basically, it's taking all those subjective items, taking them out of the picture and saying, in a year, what does the owner or the owners, what do they make? And they right size the overhead. So if for whatever reason this practice is spending too much on staff, they'll right size that. They will right size the rent. They will right size what it's going to take to hire an associate into that practice after they purchase it. Very subjective. Be careful with EBITDA. You hear that in the marketplace. Oh, practices are selling for X times EBITDA. Okay. These are all things you're going to hear. You're going to read them in publications. Another term for EBITDA is seller discretionary earnings. So again, owner. What is the owner really making in that practice in a given year? So that's what we're seeing as far as a trend alert, okay? Pre-COVID to post-COVID, valuations are holding steady. No big spike, no big dip, but we're very early in this high interest rate environment affecting sales. So obviously it's going to have an effect on the valuation of businesses. Okay, so really what should you be doing now? Again, 89% of you are looking to sell at some point. What's your trend? Are you increasing in revenue? I would say, general terms, 2021 banner year, peak year for most dental practices. There was so much demand backlog from 2020 that you did whatever you had to get those patients in 2021. Hard to maintain now in 22. Okay, staffing has been a hindrance at many levels for many practices. So I wouldn't say there's a little bit of a dip in 22, but hopefully that can continue into 2023. But 2021 was definitely the peak. What do your financial statements look like? I should be able to clearly see your top line revenue, your overhead, your associate compensation, and then owner compensation. We still inherit a lot of clients that have not the cleanest set of books. Good time to pull those out, get those formatted the right way. What does your balance sheet look like? What kind of debts are on there? What liabilities, et cetera, are on there. Good time to many years out, take a look at that. And it's just like you're inviting someone over to your house. You clean it up, clean up your books, spruce things up, make sure the due diligence is going to put you in the best light possible. Do you understand your profit centers? What's your hygiene department look like? Obviously, hygiene right now is taking a hit in profitability wise because of the costs of everything. What's your doctor to hygiene ratio? Out of every dollar of hygiene, what are you producing for doctor production? I want to buy a practice with a low ratio because I can come in and do more doctor production, more procedures, and I can recoup my investment a lot quicker. So take a look at that. And like I said, if I'm buying a practice, I want a place to practice. So I want a good lease. So do you have a good lease structure? Has it been looked at by an attorney in recent times? Biggest takeaway, plan ahead. For me, I think the hardest thing I see is someone having to sell under duress. Okay, and they're not getting the value they should have gotten if they had done some more planning. This is your golden goose. This is your blood, sweat, and tears more than likely. Plan for this, okay? And start 2-3 years ahead of time so that you really know what your goals are and what you can meet your objectives. Best advice I can give you in this section of the presentation is talk to someone that knows what they're doing. Who are your trusted advisors? Someone that's been through this before can really guide you. A lot of people will ask me, do I need a broker? I think in this environment, it depends on your facts and circumstances, where you are. Are you one doctor practice, 2, 3? What's your geographic location? I would say right now, in general, you probably should not need a broker. There's so much demand from the corporate entities and private equity to look at you. If you're looking to sell privately, maybe you need some help getting the word out. And the last thing here is, remember, don't just look at that sales price and that LOI that you get from the corporate entity. If that's the route you're going, they're going to make this thing look so rosy. You really got to dig into the details and say, okay, what's my cash? Let's say all these incentives and future items don't come to fruition. What am I going to get? And then after I pay my tax, what do I have left for selling my practice? Make sure you consider that. Okay, so that's really the high level buy sell. Now, what can come into play here is you're going to need an associate or associates potentially to sell this practice to, or as an associate, you may be looking to buy into or buy a practice, and there are other factors. So James, if you can take it away and tell us all about bringing on an associate.
Thank you, Andy. And thank you, everybody, for joining us today. As Andy alluded, I'm going to spend a couple minutes here. I'm going to talk about bringing on an associate and a couple different things that you should consider when doing so. Believe it or not, the number one question, or the most frequent question that we are asked when we meet with our clients is, can I bring on an associate? Should I have an associate? It is the number one question that we tend to see or hear. And the answer is, it's complicated. So what we advise is the first thing we need to do is we need to stop. Let's back up. What is the owner dentist looking to accomplish? What is it that you want to do? What's the main driver? What's your motivation? What are you trying to do by adding an associate? Are you looking to reduce your hours? Maybe you want to drop down a day, maybe 2 days. Are you looking for an exit strategy? Maybe you got a year out from now, maybe 2 years. Maybe you haven't put a timeline, but you know it's looming and you want to start getting the ball rolling. Or maybe you have a patient base that's just growing and you need help managing the load. An associate is a great opportunity to get in there and help take care of the patient base. So it's important to really think about what it is that the owner is trying to accomplish. We typically see, when we have this conversation, 2 different goals that are in mind. One, practice is too busy. We can't take care of the patient load. We need somebody in there to help. Okay. Or 2, I am starting to retire, planning for retirement. I need somebody to hand it off to. Okay. So it's a great way to start thinking about your transition plan. How are you going to hand off the baton? How's the practice going to go forward after you're gone? Who's going to service your patients? Who's going to take care of them? Great opportunity for you to meet with somebody, get them in there, and really have a plan for you as you move forward. Now, there's a couple different factors at play. If you're looking to grow your practice and you're still a few years away from retirement, well, when you're going through your candidates of associates, maybe the financial structure and their financial security of the associate isn't that important. They're going to come into the practice, they're going to help you grow, they're going to help take care of the patients. So that's not very important. On the other hand, if you're looking at retiring in the near future, that becomes a whole different ballgame, right? You have to be a little more picky, a little more choosy of who you're going to hire and who you're going to bring on. The reality is that you want to make sure when it becomes time to sell, that individual who you were planning for and you were helping mold and shape as part of the practice is ready and secure enough to acquire the practice and get the financing required. Okay. So thinking about it, when you bring on a new associate, it's so important that you have your goals and that they're aligned. Okay. Make sure the vision that you have for the relationship for not only you and for the practice is on par with the vision of the associate. You want to make sure this relationship is going to work for both of you and your staff, right? Like any relationship, you want to make sure you guys both are on the same page. We want to know where we're headed. We want to make sure it's going to work. And the staff are critical too, because the last thing you want to do is bring in an associate and it really doesn't work out. And then you start to see some staff turnover. In this marketplace, that's one of the last things we want to do. So how do you do this? Well, I'm going to make it sound simple. And for some of you, maybe it is. And for some of you, maybe it's not. But really, the most important thing is communicate, right? Any relationship is key. Communication is important. Share your vision with the associate. Let them know what you're thinking. Where do you see the practice going in the next couple of years? How do you see them incorporating and fitting into your practice? How is this going to work? Okay. It's important to really get to know them. You have your own homework. You got to get to know your associate. What motivates them? Are they looking for experience in your practice? Do they want to own their own practice in the future? Are they trying to make as much money as they can right now? I can tell you, most young dentists are young, they have debt, and they want to make money. So we need to come up with a plan on how you're going to keep them busy. Okay. Thinking about bringing on that associate, some factors to consider. What is the growth of your practice? Mature practices around $1 million tend to pick up 15 to 20 new patients a month just to maintain themselves. Okay. If you're looking to grow from 1 dentist to 2 dentists, you're probably going to need production. We want to consistently see it around 90,000 a month. And usually we want to see 40 to 50 new patients per month. Okay. When that's occurring, yeah, we can make the argument that you're growing at a pace that you need help. You need somebody else to get in there. If growth is not moving at that rate, well, a couple things to consider or just have in the back of your mind. One, the owner's profit is going to decline, right? That chunk of money that you were used to receiving, if you bring in another associate, that's additional cost. If you're not at least at a minimum breaking even on that associate, the money that's coming into your pocket is going to go down. And maybe you're okay with that based on what motivates you and where you are at your career, but it's important to have it in the back of your mind and to think about. The other thing to consider if you're not experiencing exceptional growth is that the associate may not be as busy as they'd like. So how are we going to get them to be busier? How are we going to help fill up their schedule, keep them busy, keep them happy, keep them content? Okay. One solution is to consider bringing on an associate part-time. Oftentimes what we tend to see is an associate who starts part-time very quickly with good strategy and good planning tends to transition to full-time, makes the transition pretty seamless, and everybody gets what they want and they end up being happy. Okay. So Now we have the associate in mind. What's the employment option? What are we going to do moving forward? How are we going to employ this individual? As you can see on the slide, there's 3 different options: employee, independent contractor, and then buy-in, buy-out, partner, owner. We're going to run through these. And so the first one, thinking about as an employee, right? This is a W-2 employee, somebody that's coming in, they're going to have set hours, you're going to work with them. It's a great choice if they're planning on staying at your practice for the long term. They can help you grow your practice without any long-term commitments, which is great. Remember though, the downside of hiring a full-time employee is that there's additional costs and risks that are associated with this. We're talking not only in addition to the base salary, but you're talking payroll taxes, health insurance, potential retirement, any benefits that you offer. The practice also assumes the liability for the worker's performance. So any work that is performed ultimately becomes the responsibility of the practice. For independent contractors, I'm not going to spend much time. We don't typically see this very much anymore, but we do tend to then see the last one, which is the buy-in, buy-out phase, where somebody is interested in coming on board and they want to start to buy into your practice. We can easily work with you, help you set up an employment transition agreement, gradually have this individual buy in or buy out over a period of time. The agreement can definitely lay out the groundwork for the time frame and the terms of the transition and how it's going to work. And this option really is the best for you if you're looking to hire someone with the intent of selling your practice to that individual. So it's a great opportunity for them to really get the terms laid out and start to buy in and see how the practice operates. So the next question becomes, well, what option is right for you? Well, obviously the answer is, well, that's going to depend. It's going to depend on your goals, your specifics of your situation, and facts and circumstances. Okay, so not one size fits all. It's going to be definitely dependent on a case-by-case basis, but we can help you look at that and we can help you evaluate what makes sense for you. Okay. If you bring on an associate and they come on as an employee, well, what comes next? On your screen right now, you see a bunch of boxes, and basically this is all going to be spelled out in the employment agreement. Okay. Base salary. What's the compensation that we're going to pay the associate? Well, that's going to be dependent on experience. Bonus potential. What's the potential that they have to earn? Employee benefits. What are we going to offer? Allowances. Are we going to give them allowance for continuing ed, some dues, professional organizations, other professional expenses? The middle box on this slide is the most important. Everything is or can be negotiated and is included in a contract. Okay, that is the most important box on this slide. Make sure you have a contract. We cannot stress that enough. Additional overhead expenses paid by the practice, things to think about: lab, supplies, hygiene, assistance, malpractice insurance. All that is typically paid by the practice. Other things to think about: production allocations. How are we going to allocate production for exams, hygiene, x-rays for the associate bonus? All important to think about and have it determined and upfront and put into that contract. Okay. And then think about trends. What's going on right now in the dental industry? What's common? Are we going to set them up with a higher base pay and a lower bonus potential? Or are we going to do the inverse of that? We're going to give them a lower base pay, but they have a higher bonus potential. Different things that you got to think about. If they were to transition and come in as an owner right away, how are they going to be paid, right? Well, how are you paid? They're going to be paid on a similar structure as you are. Base salary. How do you get paid? What's your base salary? They're now going to have a base salary. And then the last box, again, most important one in this scenario is, how are we going to split the profits of the dental practice? How are we going to allocate it? Who's getting what piece of the pie? Well, this is a big piece. It needs to be discussed and it needs to be considered up front before you go any further. If you're going to go the route where they're going to transition in as an owner, because that is going to be the most common place where we want to make sure the profit's allocated without having any issues. Have that spelled out in the agreement. Okay. Important to note, there's a pie of the practice, right? And in the past, you're probably used to getting 100% of that pie. Well, when the associate comes on, you at a minimum need to break even on the cost required to have that associate. Otherwise, some of that practice profit is going to be pulled away from you and it's going to go to cover the associate costs. Maybe you're okay with that. Maybe you're not, but it's just something to keep in the back of your mind that you need to know what the break-even point is so you can make sure you're covering the cost of the associate. Next, we put together a nice quick break-even analysis just to kind of give you a flavor of what it is that you got to consider. Salary right here for an associate, we have the minimum base of what we're seeing right now. Recently, SVA completed a dental salary survey, and the minimum that we are seeing is $125,000 a year. Obviously, the cost is going to vary by geographic location and by experience, but at a minimum, 125 is your target, but it can definitely go north of that number. Okay, other things to consider: payroll taxes, malpractice insurance, health insurance, CME allowances, the assistant cost, payroll taxes of the assistant, the health insurance of the assistant. We're talking at a minimum cost of about 200 grand to cover for the assistant, for the associate. Okay. And then real quick at the end here, protect your practice. Get a contract, work with your attorney, clearly outline all the employment terms. Make sure you know everything spelled out before the associate starts working. And then carve in reasonable notification terms. Standard is 60 to 90. We want to make sure that when the associate, if they decide to term, we know what it looks like, how can they leave. And then make sure you have a termination clause that protects both you and your practice. This is so important. Have a covenant not to compete, non-solicitation of staff, patients, or confidential information. The last thing you want is to see your associate walk out the door and take your patients and staff with them. Okay. With that, I'm going to turn it back over to Andy to go through the next steps and take you home.
Wonderful. Thanks, James. So as you can see, the interplay here, okay, we have a practice to sell or you're looking to buy a practice. Only one of the factors may include an associate known or unknown. So again, take all this information, consider your specific situation, what your goals are, what your timeline is. Please consult with your trusted advisors, whoever they may be, whether they're us, whether they're outside advisors, your attorneys, etc. And there is no such thing as a one-size-fits-all solution to whatever you're looking to do. And so really make sure it's your specific situation. We started this by considering who our audience was. And so now we want to end it by really wondering, hey, you know, now that you've heard this, more than likely now, Lee got to take a dig at us at the beginning. So now I get to take a dig at him. He wrote these questions. So let me simplify them for you. The first one, basically, you want to keep the practice independent. Okay. You're going to sell to an associate, but that associate isn't working in your practice yet. You don't know who that is. You're looking to buy, but you're not an associate in a practice right now that you're going to buy. That's the first question. Okay. Second one is you're selling, you know who that associate is. It's going to stay independent, or you're an associate and you're going to buy a practice that you're working in. Third one is I'm going to sell a corporate or private equity. Fourth one is the show me the money that I talked about at the beginning. I'm just going to consider all my options and see what I can get. What are we doing?
All right, now that I see it in print, by the way, Andy, while people weigh in, maybe it wasn't the best worded question in the world.
You're the best, Lee. All right, wow, look at this. Interesting. I mean, we obviously at the beginning it was overwhelming that we were going to sell here, and now I think we have as we thought, we have a wide array of audience and we have a wide array of options. So very good information. Thank you. Lee, if you can wrap it up for us.
Sure. So we're already a few minutes over. We figured this might be tough. There was a lot of information to go over. I think we've done this in person in the past and it's been a half day. So a half an hour is pretty tight. You guys, nice job. We did have a couple questions come in, but I want to be respectful of everybody's time, and we know who sent those in, so we can reach out to you directly. I think just as a way of wrapping up, I just want to point out you can go to SVAaccountants.com to sign up for our tax alerts and our biz tips. And there are a lot of other resources there to help you, particularly on the dental page. This is usually the part of the webinar where I mention our future webinars, but we don't actually have any currently scheduled. But rest assured, if there are important tax changes or legislation that might affect your business, we will pull something together. Lastly, I just want to remind everybody that the SVA team is only a phone call or an email away. So if you're a client, reach out to your SVA professional as questions arise. And if you're not currently an SVA client, you can contact me or anybody in our business development group, and we can help you get the answers that you need. Again, Andy and JD, great job. Thanks for the info. Everybody who's here, thanks for attending, and hope you have happy holidays. Bye-bye.